Ladies and gentlemen, welcome to another episode of the Inevitable Podcast. And today I have the honor of being here with one of the most special people I have ever met in my life, Mr. Jerrod Engelberg, my former boss at FundersClub and the person that gave me an opportunity in venture capital. It's great to be here with you, Jerrod.
Hello, Pedro. It's really great to join you here as well.
Absolutely. For those that don't know, Jerrod today works as the CEO of Codecov. They're a platform, that's basically scaling the world's leading code coverage solution, already used by over 1 million developers. Ask yourself, have you built something that over 1 million people use, let alone developers? Jerrod's a part of that. And a bunch of different leading open source projects at Fortune 100 companies. Before being the CEO of Codecov, he was the first venture hire at FundersClub. That's how we got connected. I was a part of the venture team there. And FundersClub has a remarkable track record. I think we've learned tremendously during the time that we were there. But over 20 plus unicorns, and it's really a household name today in terms of identifying unicorns at the seed level. And while he was there, he was also awarded Forbes 30 Under 30 in the VC category. And it's a pleasure to have you here, Jerrod. Thanks for making the time.
Thanks for the kind words and the research. Yeah. And thanks for having me on.
Of course. So we always like to start, from the early days, basically, and learning a little bit more about how you grew up as a child. So you were originally from Portland, right?
Yeah, I spent most of my childhood in the Portland area in Oregon. Originally born in St. Louis, Missouri, but only spent my very, very young years there. So yeah, Oregon was the main place.
And how were you as a kid? A shy kid, an extrovert?
Yeah, I was fairly extroverted. I really enjoyed walking in between different social circles, we'll say. And I didn't really identify with any one group or sort of people. I like sports and hanging with the athletes, but I also loved being a nerd, gaming, building on that side as well. So definitely, much like today, take energy and take value from being around a lot of different types of people. I think that was true when I was younger as well.
Interesting. It was the same for me as well. I never had a specific tribe. I think for a long time, there was somewhat of, I suffered a little bit from that because you'd see people just not thinking about their existence as much. And you're like, where do I fit? What do I do? At least for me, it was a little bit like that. But anyway, so how was your decision to go to Wharton, for instance, and start a career in investment? Basically, I think that there are specific moments in time where there is somewhat of an equality period for everyone, right? Like you can pinpoint a moment and maybe all opportunities were similar to everyone that graduated high school with you at the same time. And then people make choices and those choices output, different outcomes and so forth. So what were you thinking when you decided to go to Wharton? And, when you were in your early 20s, you thought that, you were going to do for maybe not the rest of your life, but at some point, what was your career path and so forth?
Yeah, absolutely. So I think from an academic perspective in childhood, there was a lot of emphasis on achievement, on academic achievement. And it's not like my parents would disown me if I didn't get straight A marks or something like this. But there was reward cycles, right? It felt good to achieve in school and to get that feedback from your teachers and your peers and your family. And so things went well, top of my class in high school. And that afforded some opportunities around the types of schools that I could go to. I knew that I wanted to study economics and business because, simply put, it just felt like a framework around the way that I already saw the world, right? I kind of thought of the world in a fairly mathematical way. And I was very excited by the idea that there were frameworks and a higher institution of learning around applying that mathematics into how people interacted with one another. I would say that beyond that thinking, I think when you are achievement oriented, sometimes you don't even have the self-reflection built in yet. It's just kind of like, we're going to do the best thing that we can at every step and figure the rest out later. I'd say that was pretty accurate for my early identity up towards early to mid 20s. And so coming out of a school like Wharton, a business school in the US, there are other opportunities afforded to you, like investment banking, like private equity, like consulting. And it's very intense. There's a lot of competition. But again, the reward cycle is tuned towards these types of jobs. So without, I'd say, a meaningful amount of self-reflection, I said, okay, I'll go do this because it seems to be what people are doing and where achievement goes, right? I think you're starting to see some of the flimsiness of this logical argument. I know your background as well, Peter.
Yeah.
Yeah.
Well, no, mine is I used to be a music journalist, so I am a mutt, but I'm pretty determined at beating all the Harvard and Stanford kids, so it's no problem. It's interesting, though. I think it's a new world, and no disrespect to any good institutions at all by any means. It's just, people have different paths. But I think that I remember one thing you've said to me when we were just starting out, and I vividly, the day that I met you, you were wearing that the T-shirt from the Portland Airport, the Portland Airport carpet, right? Like, and that green T-shirt, and I think you were in shorts, and I didn't show up super formal, but I was probably wearing a collared T-shirt, collared shirt, sorry, and there were a few things like, there was a part of the job at FundersClub at the days that we were as well. I think it's interesting also to share with people some of the multi-million-dollar deals that were done out of an apartment in San Francisco. It's the magic of Silicon Valley on steroids. But you said, look, I've liberated myself from that world where I had to wear a suit or a tie, or it was mandatory that I had to get to the office at a certain hour, right? Either in private equity or investment banking, because these are they're absolutely unnecessary for high quality work. It's just more of a cultural thing. It feels so old to even think about the fact that these jobs even exist today, right? But I guess my point is more kind of like when over time it's been incredible to watch you blossom and self-actualize into, doing what you're doing today. And the story of how you went from banking, private equity, venture to then becoming a founder, I think it's just fascinating because of the specific aspects of your entrance as the CEO and founder, certainly, of this new chapter of the company of Codecov, right? You consider yourself a refounder. Maybe give some context to people about what that means.
Yeah, absolutely. So just one comment on what you said about the clothing choice of different industries. Not only do I think wearing a suit and tie to work is unnecessary, I actually think it can be counterproductive. It's almost like a suit of armor, right, that people are trying to take to work to present a certain image. But I believe that great work can speak for itself. Right. And so I almost think it's counterproductive to demand a certain style code or something like this. And I remember sitting at lunch in the US bank discussing where you got your tie from or something like this. And I was like, wow, this just seems so trivial. And so, yeah, we worked together at FundersClub. I'm sure we'll come back and talk more about our investing together and my love for young companies of all types, and just feeling so nourished and excited by thinking about the future through this lens of venture capital and assisting these businesses. But putting a pin in that for now, moving forward to the Codecov era where I live now. And I think one of the things that I really learned from FundersClub was there is an entire world of companies out there that serve developers. And I just couldn't believe the massive global horizontal reach that these companies had. One of our investments was GitLab. GitLab just filed a prospectus to go public. Incredible business, run fully remotely, effectively from day one. Started in the open source, and now benefits all of these companies and these developers. And I thought, shoot, the next thing that I do, I really think there's something in this developer tool space, because if I want to be someone that engenders change on this world, right, brings more abundance, if you work in this developer tool space, you can really work at the absolute root level, right? That we know how much software has affected the world around us. And so what is upstream from software? What happened during COVID, right? The fact that the global internet stayed online, that our infrastructure providers were able to serve everyone, and kind of like that software layer remained relatively sturdy and furthered things like medical research, science. I was like just so impressed by that. And these are observations that I had many years ago. So after departing the venture world, I knew that the next thing, I had the opportunity to go back into venture, work at other VCs. And I think there's a chance that I do that again at some point in my future. But I knew one of the hardest parts about being an investor, I think, and actually one of the reasons that I really respect you, Pedro, is you found a way to build something of your own, kind of be in the game, right, while still helping other companies. And I think the thing that I knew that I really wanted to do, and that I learned a lot at FundersClub too, as an operator, was I wanted to fully exist in the operating world, really build something from the bottom up, right? Not be on the sidelines in any way or restricted as an investor. You can be on the board of a company, you can give a lot of guidance and feedback, but fundamentally it's still the job of the executive team of that company and the employees to carry that mission forward. So consider that the fertile ground of what venture and some of the self-actualization, as you said, came to. It was then actually one principle that I've always held in my mind, even when I was doing things like investment banking, was keep your optionality very high, right? Always think about what are the different paths in front of you and how do you keep maximal paths open for the future. And
yeah, I mean, this advice we always give to founders, like, when you want to raise money, do it from a position of strength and an optionality, right?
Yeah. And so I was then traveling around the world. I took a kind of a full disconnected break from full-time employment, which was really great for me and my partner as well. So she and I were able to travel. But I loved young companies so much that I was still going to co-working spaces, still going to startup events and speaking, but not in Silicon Valley. In Sofia, Bulgaria, and South Africa, and Thailand, and these places where for these individuals, technology was not just a nice to have or the thing that you went and did after your MBA to try to make money. It was like a way out. It was a complete sea change to their economic and social structure that had existed before. And it took away any of the feelings of jadedness that I may have felt in Silicon Valley, because it is possible to get jaded, because as amazing and as exciting this technology is, sometimes it can get a little bubbly in many definitions of the word.
Oh, for sure. You can judge that as a direct correlation with the number of flavors of sparkling water in random refrigerators. That's a good scale, or kombucha. But it's interesting that I've never thought about it that way in terms of decentralization of Silicon Valley. For me, it has always been about an ethos and a certain spirit of wanting to create something and changing the world, versus doing that also because you have to survive, not because you have the option to. It's a refreshing way of looking at it, because even though I've been doing so much international investing since ever, and primarily because at FundersClub we were quite open to it, right? You end up always investing in the elite of those countries. It's very, 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 very rare that you would invest in someone that was born a poor person in Brazil or Southeast Asia and so forth.
I think that's fair. I do think some amount of abundance helps with innovation, but also some amount of scrappiness comes from need and scarcity, right? So I think there's a balance there as well.
I agree. I mean, I was not born rich, and I'm here, and so there's definitely that. But also wasn't born poor,
right?
So there, it's like very regular lower middle class Brazil, which in the world scale, and even the U.S. scale, I think it changes things dramatically.
Yeah.
But
I do want the audience to remember what you just said, by the way, because we'll come back to some of my goals for my life, and it largely relates to some of the things that you just said. But we can return.
let's talk about them now. What are the goals for your life?
Well, I think what you just said is a very beautiful encapsulation of the difference of wealth or conspicuous wealth, excess wealth, versus lack of scarcity, right? I think some people consider this to be a pretty binary scale, but if we look at, and people also consider relative wealth as one of the leading indicators of success in society, and I understand that as well. But if we look at absolute poverty trends over the last 50 to 100 years, the amount of people living under X dollars per day, and like their country adjusted X dollars per day, it's gone down meaningfully, right? And you think about what are the things that future innovators need to be able to push themselves towards these goals, you must be able to avoid scarcity, right? Short-term shocks to the system, to your personal economic system, where you can no longer think about the long-term future of yourself and the people that you love, your family. And so,
yeah, absolutely.
And so look at what you just said, right, about growing up in Brazil, which was a tough time to grow up in Brazil, right? Not even the Brazil that we know today.
Well, yes, but at the same time, I've never had a problem of having food on the table, but my perspective is very different than others because, my mom has been kidnapped twice. I've kicked my father out of my house when I was 17. So it's a different background in many ways, but it's my background, right? Like I don't make myself a victim or, use that as, it is what it is. I was born with this and, other people were born. Each person has their own set of circumstances. What I do think it's fascinating is that there are very few places in the world where you can have so much equality of opportunity, such as the Bay Area. Sure, a lot of things that we have to do to improve in terms of diversity and, like the world isn't perfect, but just the fact that, a guy named Pedro could be cleaning your pool, making you tacos, but maybe he's also investing in your company or managing your well, doing all these other things. So it's interesting. It's only in America something like that is possible. If there's one thing that was positive from this entire pandemic that we're going through is this decentralization of that ethos that we're seeing all over the place, right? Walk us through I know we're all over the place with certain topics here, but you were, right, in the Bay Area, living the perfect tech founder life there, venture backed, all your roommates, people around you, everyone is in tech, and then suddenly COVID hits. We were, both of us, depressed with the status of things in San Francisco. I think the rest of the Bay Area is fine, but just that city became, at least that's my opinion. You of course share yours, but just it's a systematic disaster. And we left, and my life got better, and I'm doing better business as well. So I don't know, how was that for you? And as you were thinking about this decentralization of innovation, like you travel, after you left FundersClub, you start traveling, right? And you say, hey, I'm going to multiple co-working spaces, I'm meeting people. So today, living in Europe, living in Amsterdam, do you believe that you can be as successful as you were in San Francisco as a tech founder that's venture backed by some of the best firms out there?
Absolutely. I believe that. And this was for us, not to say I did it before it was cool, but inspired largely by GitLab, Envision, other companies like this. We were fully remote since 2017 as Codecov. And we really fundamentally believed in the power of remote work. And Pedro, that equality of opportunity point that you made about San Francisco, I do agree with that that's part of the tech ethos. However, there are many people in this world who cannot or will not ever come to a place like San Francisco or New York or any of these tech hubs, right? And so for me, when we'll get to this, but refounding Codecov and building our mission and principles and values, we wrote remote work, being a remote first company, into our principles. It's not a passing fad or an economic arbitrage opportunity on hires, because there are people all over this world that deserve this opportunity, right? And there's an access problem. And so if we can do our small part as Codecov, both to employ people elsewhere, but also to build a tool for the world that allows people to, developers specifically, to more closely collaborate asynchronously, cross-border, build more trust. Like our mission is to build this trust in the communication between developers, starting with code coverage, but we have many different things that we're working on to that end. Vision is not just to build code coverage. Like to me, it's a moral obligation. It's a calling until we can balance this out, because we were too skewed to one side or to these specific brain hubs. As far as us.
And for those that don't know, though, Codecov has been a remote company before the pandemic.
Totally.
It was remote from day one, and it was something that was pretty important to you. Now, it is, it was great because it didn't really change much, right, with the pandemic. There's one point, though. It was remote, but you were in San Francisco as the CEO. Yeah. There's a difference there, right? At least in terms of the connections that you make. And were you scared when you were? There was a part of me that was a little scared about the moving to Miami. Although I continue to go to the Bay Area frequently, I don't miss it at all. Yeah. It's funny.
I think if it weren't for this COVID was a forced push to remote and asynchronous work, right? Which I think net will be good. Like that piece will be good for the world long term. The means to get there was not good for the world, obviously.
Yeah.
As far as moving to Europe for me, as my main place of living, look, there's a couple things. One, as you know, you can always go back, right? You can always fly back. You can spend a week, a quarter, a week, a month, whatever you need to do. But if San Francisco has a cardinal sin, it is that they over-indexed to the technology wealth accumulation that was happening around the city specifically. And even more dangerously, believed that wealth accumulation would continue in that place in the way that it had ad infinitum. And so when we saw that switch, right, and that was, we could see the trends. As you and I both inhabitants of the city, we could see the trends. We could see the art moving out. We could see the different cultures and societies and tribes of people having to switch out of San Francisco, having to roll out of the place. And is that totally the responsibility of the city? No, there's other responsibility to go around there as well. But then I think even before COVID, but now with COVID, there was a double whammy of the assumptions that had been made about how the city would continue to develop. Like history is not predictive of future results, right? Completely inverted. And then, and that wealth source was gone, right? And so it's been, I think, I don't envy the city councilors in San Francisco, right? It's a very tough job right now. But yeah, it was a very challenging place for me to live. Even before I moved to Europe, I had departed the city and started traveling.
Yeah. I was tired already 3 years before the pandemic, just because social life is crappy in San Francisco, especially if you're a founder or a VC. Everything runs around your job. And, Friday night, not every Friday night I want to talk about Lambda functions. Sometimes I just want to chill.
Well, it goes back to when we were talking about our childhood, right? I don't exclusively identify with any one of these pursuits. I try to be relatively genreless in my approach to life. I'm not death metal. I'm not electronic music. I try to bleed across. And San Francisco was a very genred place. It was very you were benefited by sticking into this singular pursuit, and it was challenging to be outside of it.
Which is so refreshing, to go to other places around the world, and you realize also how insignificant all of us are, and
totally.
It's just that is humbling in many ways. That just our job is just like any other job, and we've got to treat everyone with kindness and respect. And I think that it's the combination of that plus. And probably every ecosystem has that, right? You probably have actors that are successful enough that can then get the best movie contracts and leave LA. And the same thing for the Warren Buffetts of the world. That he can live in Omaha, not Wall Street, and he can still do these deals and so forth. So it is. There's somewhat of a liberation around that. And but I wonder though, like one thing that before we start going back to Codecov, just talking a little more about venture capital itself, I'm just having some memories right now of my first few weeks at FundersClub. I must say, I was so scared. I was just like, I was really scared and really intimidated because first and foremost, I felt that everyone around me, they were just far more intelligent than I was, and I recall the first week that either you or Boris said, "Hey, you have 3 months to source a deal, or maybe we're gonna have to have a serious conversation." and I was like, "I am fucked," because my visa is attached to it, like I did, this whole H-1B thing, and then it was good that the Pipify, then Rappi, and all these companies, they're worth the first three companies are worth between 700 and 5 billion today. But looking back, though, there's no way that you would know that was going to be I mean, there were some ways, but I just want to say thank you. I've said this many times, but also happy to say it on the record about the amount of lessons that you've taught me during that time. They've changed my life forever. I have all these memories that I think they'll never go away. At least while I'm conscious in this life. But of how much that job made me a better person, and that level of pressure and intelligence is interesting, because I think that it's a different Funders Club, right? When we were there versus what FCVC is today. But what do you think that made what we were doing special versus other folks out there? It was different, right? Like because we operate like a startup. But for those that don't know, maybe some context on what we did together, what was Funders Club, and then what were some of the differences that we've had at that time. Today, I think everyone is doing SPVs.
Yeah. Well, I mean, first of all, you have to be fair to yourself, Pedro. Your genius expresses itself very clearly. Like, your track record speaks for itself, right? How do you measure the success of your VC investing career? It's the portfolio you put together. And by the way, you were already sourcing deals before the first day that you started. So you were the model citizen of how to start building your pipeline. No pun intended with Pipify and Alessio, before even you walked into work the first day. So I don't think I ever had a doubt in your success in that trajectory. And that's why, frankly, we hired you. And your genius is different than my genius. And that's, I also think, from a hiring perspective, I want to build containers for those that carry this genius and just allow them to flourish in this way. So I'm glad to hear that a little bit of pressure helped out. I also got early pressure when I started at Funders Club, and that helped me identify my own personal bottlenecks and work through them. So the company itself, Funders Club, was quite innovative at the time. This was, even before AngelList was doing SPVs or anything like this. The idea was effectively an equity crowdfunding model, but instead of using, not to get too deep into the regulation stuff, but instead of using true crowdfunding, used historically validated approaches to raising money from accredited investors for specific investments. And that's what Funders Club did. It was in effect, an abstraction or a distributed layer of the role of a VC, validating investments, raising the fund, and investing in the capital. The inversion happened that we traditionally wouldn't raise the money until we already identified the company. So from a product perspective, it was to give the founder the certainty of the fundraise and the investors the certainty around the investment. We had to be very fast, right? We had to use software to take things that had happened in history around raising funds that can take months, years, and condense them into days or weeks, right? And that was a real product challenge. And one of the things that I really loved about my job at Funders Club was the product aspect. How do you use software, use technology to repair old or out-of-date systems? And I think the funny part was raising money from venture capitalists for this thing that was trying to kind of disrupt venture capital in a sense, right? Or at least the seed stage. I think, at our peak, we had multiple single-digit % of all seed volume in the world running through Funders Club, which is a substantial market. So that was pretty exciting. To say nothing of, I think, some awesome companies that we've been able to work with, and their success has really shown itself in the years since.
Yeah, just to put into perspective, if you had access to that platform, you could have invested in Coinbase, GitLab, Instacart, Flexport, Shippo, Equipment Share, Bitso. I mean, there's just so many incredible businesses that today are unicorns, and this was true democratization to a degree. To the limit that the SEC allowed, right? For people actually to have access to something that was not obvious at the time, and today people at least accept that there is, that there could be, incredible outcomes out of backing inevitable people, startups, and so forth. And I remember, because just so you guys understand, the listeners, how it would actually work day to day. So we would find a company and operate exactly like a VC, but first and foremost, we'd make a commitment. We weren't sure if we could write the entire check for the commitment we made, and there was this entire process that was around the table in order for us to approve an opportunity for investment. So I remember, I was like, how can I sell this? This is a complicated process. Right. So I because ultimately people just want to talk, at that time, they want to just talk to VCs that had committed capital, could just say, yes, here's it, docs, boom, sign, wire the money the next day. And we needed 6 weeks. And sometimes, today's 6 weeks, it's like 6 months. But at that time, still, it could be a while. And I remember saying, hey, if you read I would ask these founders, like, have you read the Mark Andreessen, Software Eating the World post? That we are software eating venture capital. You want us in your cap table, and then I would reverse all of our issues and I would sell them one by one into the model. Those were really fun times. I mean,
to be fair though, Pedro, to FundersClub, I think there was actually a great deal of empathy with our founders in how we structured our product in the following way. Yes, it might take a few weeks for us to raise the capital retroactively and fulfill our investment intention. However, we were able, through close listening to our user, the founder, identify a very core difference for the founder. There's a difference between calendar latency, the amount of time for the money to fund, and the amount of time that the founder actually has to invest him or herself into the fundraising process. And where I think we actually really kicked ass was because our scope was so wide, over 20,000 accredited investors at that time, we could, with very little founder time, amplify their voice to these investors. And yeah, maybe it would take a few weeks for the money to fill, sometimes faster than that, sometimes slower. But you're not going to spend all the money in one day anyway. This is just like an archaic way that we raise money, where it's a flood of capital at one time instead of a drip as you need it. And so I actually believe once we had the commitment and the conviction of the founder, that it was even more delightful experience for said founder.
That's right. No, that's right. That's right. When they would see the memos, and by the way, this wasn't necessarily a criticism. I am a massive fan.
No. I was just
Boris and no. It is no. I know. But like they know, I talk to Boris almost every week. Some massive, incredible mentors. One of the most brilliant people I've ever met. It's not that it was painful sometimes. We've had a few founders that were super paranoid about sharing information, had to like ship different features. Like it wasn't perfect for everyone. So, but I do believe that what you're saying, it is true 100% that the ones that embraced the process loved it because they understand that when you align long-term interest with someone, such as taking venture capital money that is liquid, high risk, and perma long for the most part, you want to just do it with people that you think are cool, that are genuine, that are interesting, that will help you, that will go above and beyond what you were doing. So we certainly had that level of sexiness that other investors didn't have, and I think because we were far younger, more aggressive. There was far more respect. The vast majority of people liked it and embraced it. You are correct.
Yeah. And much like any disruption, right? Let's use crypto, for example. I remember in 2012, 2013, debating with people about Bitcoin and crypto. And they'd say, why would I ever need this? The monetary system works great for me, right? Yeah, okay, maybe ACH takes a few days and it's a little annoying on some of the banking stuff, but my credit card gives me 2% back, 3% back. This is great. Like, why do I need to tilt over the apple cart. And I think with any disruption, if there's certain people that the market works really well for, there may be sometimes it's the hardest for those individuals to see change coming, right? They really have to gain third-party perspective or separate themselves from themselves to get this perspective. And I think, yeah, there's for a certain percentage of companies, venture capital is a very smooth process. But for some, it's not, right? And depends on the VCs you're working with, and there's all these reasons. But so that's, I think on the crypto side, people have now come around to the idea that, oh, yeah, there's like many countries in the world where the monetary system maybe is not as reliable as we want. And they look at the US and they say, oh, wait, maybe the monetary system here is not as reliable as we want. Maybe there's something to this crypto thing, right? And so it can take time. But I do believe that in all cases, software generally tends to help industries like these. So software is just a tool, right? But when smart, empathetic, talented, caring people build around these needs, they can make change, make waves.
Yeah, absolutely. It is interesting though to see that most of the innovation around the asset class itself is so slow, because the concentration of returns, it's like a double whammy on Pareto for who actually gets to make the money in VC versus who doesn't. And the incentives aren't necessarily out there until they are forced to change. There are many examples that we can talk about. We can talk about basically Josh Buckley winning a deal, a Series A against Benchmark, because he was willing to go, lower 5% on equity ownership as a solo GP versus one of the most legendary VC firms, but also one of the most traditional VC firms, with all the respect to the incredible work that they do, right, as partners. Elad Gil, as taking the definition of a super angel to a whole nother limit. So, some people just have such strong personal brands that they can run their own SPACs now, or so it's interesting that I think innovation in the asset class itself is happening across maybe 4 or 5 secular trends that are happening, right, from social media influencers or podcasters becoming professional investors, to professional investors wanting to become social media influencers and podcasters, and everything in between, to the concentration of the fact that's like when you think about capital is just a tool, right? And not to get super Alan Watts illusion of money thing, but ultimately it's about the people that you work with, right? In a world where, imagine if we all had the same resources in terms of money, yeah, what choices would you make in terms of the partnerships that you would have? Right. I feel like that's where the asset class is going, where it matters, like the firms. And I don't know, like, what are your thoughts when you think about stage financing for your company, and how much do you care about the traditional firm versus a collective of, individuals that can have an, unfair advantage to help you? Or what are your thoughts there?
Well, I think if I were to be logically consistent with my framework for the world, I think there's just way too much human intervention required in startup investing today. In the idea that it's a quite painfully human process, more so than I think most industries. Market making, like, we've seen a lot of technological disruption, even in later stage equities, right? Everything from market making to smaller trades to books, and then the clear banks of the world on kind of the debt financing side, right? What I believe startups suffer from is asymmetry of information or absence of information. And so you can, as a venture investor, you can gain a lot of alpha, or unfair, I shouldn't say unfair advantage, but just advantage relative to new entrants by having done this for a long time, right? Because you have aggregated pattern matching data, thoughtfulness about types of companies that work versus don't. And so, unfortunately, because all these companies are private, this data is not out there. And I'm not saying necessarily it should be, but I do think just based on data availability, venture will be one of the last asset classes to gain more and more technological intervention, which is ironic because venture capitalists fund the most disruptive ideas, right? To tell you where I base this from, there's this idea of wisdom of the crowds, right? That where if you put, 1 million jelly beans or whatever in the jar, the average, and you put 1,000 people up to guess, and then you have an expert. The actual example is there's a cow at a state farm, and you're trying to guess the weight of the cow. Cow experts, bovine experts, can all guess, and you can take each of their guesses, and then you can let 100 people guess and average their guess. The guess of the guess of the common people, the average guess of the 100, more likely will actually beat the experts, because in that particular case, the information is very clear, it's available, it's visible, and it's balanced. There's no information asymmetry. In venture, there is information asymmetry. That you feel this both as a founder going to raise money for the first time, especially, where you have these practiced and sophisticated investors on the other side of the table, and you're doing this for the first time, which is why it's great to have networks of people to help you and advisors, etc. And then you feel investor versus investor, right? As a newcomer, as an angel investor, you're going to have a harder time understanding the market for companies, gaining access to these deals, understanding how to do so. So that's where, yes, I'm excited about the Alod Gills of the world and the Josh Buckleys of the world, and the single GP is kind of disintermediating the LP process. But I still think it doesn't fundamentally shift the information asymmetry in the market.
Yeah, maybe we will never see enough innovation at the same degree of the rest of society. There's also another important aspect in which when people break apart, and there's a moment in time probably where they make enough money at the personal level that they stop caring. And they're just kind of like, they just want to chill. There is, a certain amount of that as well. And then, if you're already gotten to that point and you're living your self-fulfilling prophecy, you'd have to have enormous motivation in order to keep on fighting. And we see that with certain people. They don't seem to have a more balanced aspects of their life that I also do value in terms of, family and, to your personal side. But that's a whole nother conversation. But just, it's interesting that I think pointing it back to information asymmetry is probably the biggest incentive towards, innovation versus, just some of the things that we see happen in venture that sometimes, make no sense. So you then, after FundersClub, start traveling all over the world. How did you get to know about the Codecov opportunity? And I think the fascinating story behind how you structure the whole thing about you becoming the CEO, and it's a meant to be opportunity, because I cannot think of a better person to do what you did to be where you are. It's beautiful.
Yeah. So I will say it's a relatively atypical story. I haven't heard stories like this very often. Once in a while, but not so often. Not nearly as much as founding a company, which is still a pretty atypical story. So, as I mentioned earlier, I was traveling. I had this thesis around developer tools, why developer tooling and supporting this whole guild, this global guild of builders can do so much for our world, and why I wanted to be an operator and, not be on the sidelines of investments, but rather kind of be building a company. I wasn't sure I was ready to start a company, though. And I think it's really probably not a good idea to start a company until you're relatively certain. Like, you're always going to have to take a blind leap of faith at some point, but I wasn't sure yet. So there's your fertile ground. I'm traveling, as you mentioned, going to these co-working spaces, and one of my buddies said, "Hey, I was in Amsterdam visiting him, and he said, hey, there's this awesome co-working event. My friend works at GitHub, and what he told me was, there's this guy who built this thing that's absolutely tearing it up in the GitHub ecosystem. You should meet him." And I was like, okay, cool. So went to this co-working space in Amsterdam. They had some free Heinekens. I met Steve Peak, the founder of Codecov. At the time, he had built it from an open source project and was having early commercialization success. He was definitely making enough money each month just selling his software, where he and his family could have been set forever. I mean, like forever. and he hadn't raised no outside capital, had no other employees. And I was like, wow, first of all, what a ringing endorsement of what I just said about developer tools. The fact that a single individual with no support, like no one gave him a big stamp of approval that said, you're allowed to go build this, just built something and it caught fire. It's like, I just thought that.
How much was the company making at that time?
Like five figures per month. And so that was kind of the end of the conversation. Like Steve and I had a nice time together in Amsterdam, saw him at a friend's birthday party the next night. But that was sort of it. Exchanged numbers, really liked each other. And that was similar to some other experiences that I had had talking to other people that were building great things. And I'm just so supportive of people building great things. I have to shout out Daniel Hengenveld from GitHub, who made the introduction as well. So 6 months later, Steve called me up and said, Steve is a very brilliant technologist, by the way. Great product person, great developer relations, great engineer. He called me up and said, I have an idea for a new company based on some of the pain that I'm experiencing working on Codecov. And I was like, that's awesome. I love new companies. Let's talk about it. Let's act on it. So just kind of in an advisory or consultative manner, which I love doing with young companies. By the way, if the company hasn't raised any money or isn't making money, generally I'll just always help them for free, right? Because I just, as you said, Pedro, the startup ethos, you're never really sure how these things are going to pay themselves back. But just to help the fledgling, super like tiny seed that are starting to sprout, I think is such a awesome endeavor and gives me a lot of joy.
Yeah, that's the reason why I love this job so much, is that it forces you, if you want to win, you must be a good person. There are no shortcuts, and especially also as at least my view on what it's like to be an investor is about serving others. You have a fiduciary duty to serve your LPs, but you also have a fiduciary duty to serve the founders that you partner with. And every day, most of my days, right, you're only talking to incredibly motivated people that are following atypical stories, taking an enormous amount of risk to self-actualize, and then you have to on a serialized basis serve them with excellence. So the only way that you can do that really well is to have tons of self-love, respect yourself, be healthy, eat well, have enough energy in order to then be in the arena and make that happen. So and then always be nice. I think you told me this. We actually say no to 99% of our customers, so we got to say no really freaking well.
Yeah, absolutely. Yeah, definitely true in venture and elsewhere. And so, yeah, so just there was no expectations, just helping. And then as I got closer and closer to Steve and the new thing that he was building, I asked him, Steve, what about Codecov, this thing that you've already built? How's that going? And it's clear that Steve's greatest resource limitation was time, right? He hadn't hired anyone. And so he was trying to do these two businesses at once, which was audacious and awesome, but was very challenging as well. And so I was still in between jobs at this point. And I said, and I flew back to Amsterdam, and I was like, well, let me just see what your day of work is like. He had dozens and hundreds of support tickets and sales inquiries and all this stuff on Codecov, and I never hired anyone. So my start with working at the company was pretty organic. It was just kind of helping manage the load. But then as his new company started to gain more success, by the way, the new company is called Story.ai. Awesome business, really huge visions. Now raised money from Index Ventures and one of the Google venture funds. So he's doing really well as well. So it's kind of a nice segmentation there. As I got more and more involved, finally I said, I kind of had a weekend of reflection and that, and I was like, wow, this is going well, and I think I can do this. I've never been a CEO before, but I think I want to take a shot. And I called up Steve and I said, hey, I'd like to try to run this business day to day or work on it full time. And he was like, great, I've been waiting for you to ask me that. Let's go. And so
I love it.
Yeah, and so it was, huge credit is due to Steve, the original founder of Codecov, because he was so patient and trusting, right? Effectively, Codecov was his baby, right? And this isn't a hostile takeover like you see in private equity. This was an adoption, basically. He gave up his baby for adoption so that I could try to grow that thing, this company, into its adulthood, right? Into kind of fully formed SaaS business.
It was a loving takeover.
Yeah, and what's crazy about legal structure as well, and this is where some of my past finance experience I think really helped out, is when you want to hand over the reins to a company, it's not like giving someone a t-shirt, right? The government is very interested in what's about to happen from a tax perspective, from a legal standing perspective. And so these are two people I'm still very close to. We're still friends. I've gotten to watch his daughter grow up, Olive, beautiful, beautiful girl in Amsterdam. And even still, with the closeness that we had, it's like a 150-page legal document that governs the thing that we're about to do. And so you really, when I think about inevitability, one of the things you talked about, that was a moment of it. You had to have extreme belief in inevitability, because if we couldn't get it done or the deal fell apart, I would have walked away with nothing for over a year of work, right? And I remember my parents asked me once, they're like, well, what happens if it doesn't work out? I was like, well, first of all, I trust Steve deeply. And as you just said, trust and goodness in people, I think, exceeds any sort of legal structure that you can generate. Now, obviously, you should have both. But two, it's like, if it doesn't work out and I lost a year of my life trying this, okay, I'll go find something else. Right. And I think that's learning to fail is more than actually failing. Learning to fail is also getting very comfortable with the idea that you can fail, right? You're taking the guardrails off. You're fully in the arena. And I think that's important too.
You touched on some interesting points here, even through something you've said to me. I've recorded many lessons from our time at FundersClub, and one of them was that when we were looking at docs as well, you said, right, hey, we both want to get this done, but yet we got to go through 150 pages of legal docs, and it's all provisions that were there at a certain point. They were there because someone at a certain point in time was fucked. That's it. Like, you don't create these things out of thin air. Probably at some point, when like caveman A was exchanging a rock with caveman B, they just wanted to, like, hey, let's just give each other a hug and make this happen, until there was a problem.
yeah So what Pedro's referring to is, if we're in third grade and I write you an IOU because you gave me your lunch pass for the day or something, it's 2 sentences. And business works like that too. It's a lot of IOUs and things that you just write down. For example, an email is remarkably enforceable in court. If you write an email like, this is how I understand it. If you agree, please say, I agree to this email. Like, that kind of thing can stand up in court. But when lawyers come in, they look for downside. They look for places that things can fail. And so when you look at this legal agreement, this template legal agreement, that's 150 pages, or if you're raising your Series A finance, 70 pages or whatever it is, with your stock purchase agreement and your vested rights agreement, if you just look closely at any one of the paragraphs, the way that I always thought about it was like, as Pedro was saying, it's like, who got screwed at some point? And why did the lawyers add this now as part of the template, just the starting point that you work from? And it's like, you must deliver this thing within 15 days of this thing. Right? Well, it's like, because someone probably was like, well, I don't want to give this over yet. I'm going to wait another 3 months, and then screw somebody else. And so they add this thing. Or I could come up with a million examples, but I think legal agreements can be extremely overwhelming, daunting. I'm not a lawyer, but I've learned to try to think of it in the context of, what are the incentives of the different parties, and what is this clause trying to address, and do I care? And secondarily, law is also, for the developers out there, law is also kind of like badly written code. Like, if you really break it down, it actually has a lot of the same characteristics of code syntax. It's just written in plain English and in pretty archaic plain English. So it's much harder to parse. And so when I'm reading a legal agreement, I'll sometimes like break the line into like, how would this look as a logic statement in Python or something like that. Anyway.
Yep. No, but that premise, though, facilitated my interpretation. That also, as well as life experience, it's the whole thing that Mike Tyson quote about no one, everyone has a plan until life punches you in the face. And I will tell you that every time I've had an agreement in which I was, previewed just to the trust of the angels, the outcome was not necessarily good because some sort of devil came along and changed things, So ultimately, you want to always have the enforceability of excellent behavior across a multitude of potential predictable situations. Unfortunately, it's the sane way of doing things.
Well, I think you're totally right. One agreement that because we're building cutting edge technology at Codecov, one of the things that we sign with our employees is the Proprietary Inventions and Information Agreement, right? It's basically saying the things that you worked on at Codecov are property of Codecov. But it also says the things that you don't work on Codecov are not property of Codecov. It's a bilateral separation. And they get to, when people start or as they develop things on the side, and we love people working on side projects, by the way. I think it's very nourishing for developers and everyone on our team. I'm very explicit. I was like, please carve out, please tell us the things that you're working on the side so we can put them in this agreement. Because yes, Jerrod, I'm the CEO right now, but just imagine that, God forbid that I die and like some evil CEO comes to take over, right? We want to protect each other in that case, right? It's not because I don't think you trust me or I don't trust you. It's like, let's get the right container around this, right? The right safety measures around this so that it's unimpeachable. It's clear where that separation is. So yeah, I think sometimes lawyers can get a bad rap as well. It's like, in a sense, they're always thinking about the worst case scenario. It's kind of what they're paid to do. But it's kind of important for when things do go wrong. Yeah.
Yeah. Definitely. Well, switching gears a little bit, but still talking about Codecov. What has changed in your life from the before and after being a CEO? And how did you prepare for that challenge? Or what do you do to continue to prepare and make sure you're a good CEO?
Yeah.
A lot there, I know.
Definitely a daily journey, and some days are certainly better than others. I think there's only a couple of things that you can really get wrong as a CEO, like really, really get wrong. And so I try to avoid just like a startup, there's a few things that can kill your startup early, but they don't necessarily define success, right? We would always look for these as red flags when we were doing diligence at FundersClub. So I think just like that as a CEO. So here are the things that I definitely try to avoid, both as a manager, but also as CEO. One is you need to do what you say you're going to do. And two, you need to care, right? I think just doing those two things as a manager, as a leader, gets you ahead of like 95% of the global population of leaders, which is crazy to think. But when I think about where I've heard the most distaste or distrust of leadership, it's often around those two things. It's like they just don't uphold their word, or it seems they don't care about the business or the people that work inside of it. And so those are always very true to me. And then as the CEO specifically, there's a great article on First Round Review called Give Up Your Legos. You have to give up your Legos. You have to, and what I mean by that is, as the company scales, which is a success, you have to trust people that you've hired and give up the things that you've done before and kind of only hold on to a very few select roles and responsibilities as the leader. It's very easy early in scaling to give up the things that you don't like to do. Like, oh, awesome. I never liked doing X, whatever X is, my accounting. I get to hire an accountant. Sweet. I don't have to do that anymore. But then they start coming for your superpowers. They being the awesome people that you've hired. I'm using they glibly. And you say, oh, let's say I was a product expert. Well, now you got to hire a product lead that's going to take that responsibility from you. Or it's like, oh, I was an amazing salesperson. Well, now you got to hire a head of sales, and it's going to be their job. And the more that you interfere with them, the less likely they are to succeed themselves and scale into full autonomy. And so that's where the other place that, especially at my stage of business, kind of early in that scaling process, I think it's an easy misstep to make, but one that can be pretty fatal.
Fascinating. And I love the simplicity of it and how it holds true. It's just do what you say you're going to do and be a good person. And then sometimes most leaders can't do that.
To be clear, sometimes I can't say everything that I do is good or righteous, but I care enough to try to fix it if I did screw up, right? So I'm not always successful at that part either, but hopefully the caring shows through.
But knowing you and your ability to execute, your resilience, your intelligence, I've always actually maybe you don't know this, but like I've always said, hey, and you gotta meet this guy Jerrod. Like he has a quad core brain. It's like a quantum computing inside a human. What do you think is going to happen after you have a successful, like you have an exit, right? Like with Codecov, we were talking just to start, the beginning of the end of our conversation about your life plan. You seem like there are a bunch of specific things that are important to you that you've planned out or thought about that you'd like to get done during your lifetime.
Yeah, absolutely. I think, thank you for complimenting my brain. I think the thing that rings truest to me over the course of my life is using my standing, hopefully my success as it comes. I do believe Codecov will be an extremely successful company. Inevitably, maybe not quickly, right? This is something, I think the deep confidence, not the boisterous confidence, it's like something that I always try to work on. I think sometimes in the US we can actually be too humble, right? And too demure. Like forget to say like, hey, I think we can do this thing. We can do it right. So all that to be said, my long-term goal is the same goal as it is at Codecov, which is the removal of scarcity mindset from this world. Because from my studies of academia, primary research, it appears that scarcity mindset is a systematic reduction in our decision making, right? So an example study from, so there was a book called Scarcity written by a Harvard professor and a Princeton professor. They did a cross-sectional look at a bunch of different scarcity studies. I've gone a little deeper on some of them as well. The exact parameters of the study I might mess up, but I think I have this right. They gave an IQ test. Now, IQ tests have their own set of problems, so just take it as a placeholder for intelligence. And they said to people, they gave them the IQ test, and then to the second group, that was the control group. Second group, they said, imagine, this didn't actually happen. Imagine you have a $3,000 car bill that you need to pay because your car is broken. Just imagine. Just put it in your mind. If those people had less than $3,000 in their bank account, they performed on average, I think like 20 to 30 points lower on the IQ test, systematically. Just think about what that means. It means that Go ahead, Peter.
No, it makes a huge difference on everything that happens around your life.
Absolutely. And so if you can remove that scarcity from your mindset, you are literally making yourself a longer term and smarter decision maker. And I believe that individuals can do this themselves through things like meditation, through things of this nature, right? Kind of reducing or building a healthy relationship with our needs. But I believe that we as society and as individuals have a huge role to play here as well, in building this abundance around us in many facets. And so it also means, very importantly, that poverty is not endemic to any one population or group. Poverty is systematic to our human brain, right? If we have scarcity, it begets scarcity, which is one of the most dangerous parts of this whole thing. You can get sent into a downward spiral, right? Because your scarcity brain makes you a worse decision maker, shorter term decision maker, which then begets more scarcity, etc. So my goal, not through software, but probably will also be through technology in the future, just because I'm such a technologist and an optimist of technology, will be continued to be pointed at that problem set.
That's very interesting. A very sophisticated way that I've heard, like just like a pitching something that's very complex and big, but with elegant simplicity, was was hearing how On Deck, for instance, pitches themselves, just like the company, right? And they'll talk about like, we exist to organize the world's ambition, which I thought was like is an incredible way of putting it, right? And if you think about this, especially like I'd love to just like you exist to organize self-reliance, almost like like that Emersonian type of belief in yourself, and that comes, I would say, from a very young age, where we are taught some really useless stuff in school. Right? I mean, how many times had you had to use applied calculus? Should do the stuff that you do maybe a few times, but like almost nothing, right? Like almost never. So it's I wonder how that could be done in a systematic way, to just have, so people can have an abundance mindset and just have enough trust in themselves, while being able to do small things that are tangible, in which you feel progress, that you are actually doing that in a conscious way, and so forth. Because you can't also apply positive thinking for someone that's living in like, I don't know, if I am an Afghan and I'm trying to hop on that plane inside the Kabul airport, all I care is my survival.
And that's a beautiful application of evolutionary psychology, right? I have tunnel vision only to that plane at that moment. And I think that is net beneficial to that human at that time. But when do we use tunnel vision, right? I think it's just used way too frequently in our society. And to be clear, I still believe that abundance of resources for any human is the single biggest catalyst to finding abundance of mindset, but it's not deterministic. I know many, as I'm sure you do, I know many wealthy people who still have a very scarce mindset as they navigate the world every day. And I know poor people without kind of the financial resources, some I know, that have an incredibly abundant mindset, right? Both are possible, but I think that the most correlated or causal variable is abundance of resources.
Definitely. No, because it gives you tranquility. I will tell you that there were deals in the past that I did in previous professional chapters that I would never do today. But it was certainly out of that fear of feeling pain, of scarcity, of not understanding, hey, I don't have enough personal runway to survive for 6 months or a year. Thus, I got to do X, Y, and Z in order to be able to do A, B, C.
Right.
And the amount of poor decision making that goes around that scenario is crazy. But there's a moment in which, today, fortunately, I have solved the money problem in my life. Great. And then it put me in this entire different mindset of abundance, of risk taking, of, really figuring out what is important in life, and how to get someone to transition from one place to another is difficult, because I'm not sure. Do they, like UBI, for instance, Universal Basic Income, would solve for that problem? But we're very far from everyone having a base level in which they come out, they grow up and they think that they can do anything. I don't think that money or basic income solves for that. I'm actually, my opinion on this, I believe that what you're saying is true, and I think this is a beautiful mission, is that it comes back to family values. Why I think I have this unbreakable determination is because of the love that my mom gave to me. Seriously, this is the number one thing that probably gives me and drives me that force. So it's just like, maybe you need it from one parent. I only had it from one parent, but that unconditional love is probably the most important thing that one can have. So ultimately, just having a family structure that provides abundance of love probably is the bedrock to build what you're talking about.
Totally. I mean, you look at not a psychologist in any stretch, but you look at abandonment theory or borderline personality disorder, like these things that come from scarcity of love, right? Not knowing if the love will be there for you in an hour or tomorrow. And so, yeah, absolutely. I think that is a huge ingredient for sure.
Great. Jerrod, I just have a few final rapid fire questions for you.
Let's do it.
But what's an ideal morning routine for you? if you have any?
Yeah, so I'm intentionally not a routine person. I'm an intuitive thinker, eater, exerciser. So I just set up containers to make sure that I can do those things when intuition strikes. I have the bicycle, I have the Headspace app, etc. The only things that I've been able to convince myself to do on a daily basis are brush my teeth and floss.
Great answer. What's something that you started doing recently that you feel like significantly improved, your routine, or something you bought? Answers vary from a Bluetooth speaker in your shower to, I don't know, finding God, just so you know what we have learned about other people in this podcast.
Yeah. For me, moving, I don't know how practical this is, but your physical setting matters so much. Changing my physical setting has meaningfully changed my life. And I feel like any of us can feel stuck in a place or a time, and it can feel really daunting to change our physical setting, but I think it's so valuable.
Perfect. Well, Jerrod, thank you for being here on this podcast. It's wonderful to see you and catch up with you. Wish that we did it in person. Soon we're going to have a studio in Miami. I'm excited for that.
Can't wait.
For the ones that come visit. But thank you so much for your time, and thank you for listening to another episode of the Inevitable Podcast.
Really enjoyed it, Pedro. I've loved seeing your trajectory and your growth, and I can't wait to keep watching you grow.
Thank you.